we're in much, much worse shape than we were 2 years ago. We're much more deeply indebted, so we're that much closer to the gigantic crisis that's heading our way.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is John Rubino from dollarcollapse.com. John, thank you so much for joining us today.
Hey Elijah, good to talk to you again.
It's great to have you on. And what I wanted to talk about first is kind of the economy. And one of the things with respect to COVID, it was a shock to the economy, right? And we have had this economic crash, but it seems like, we're getting out of that. One of the things on the horizon is that COVID unemployment benefits will be expiring. And actually some states are kind of letting go of those early. How do you think this will impact the economy going forward?
Well, I think it'll help normalize the economy because right now there's a labor shortage, believe it or not. All kinds of companies are out there, offering big bonuses to people to sign on, whereas there used to be, a line out the door of people applying for jobs. Now, a lot of companies just can't find enough people to do the work. And part of the problem is that unemployment benefits were temporarily so generous that it wasn't worth it to a lot of people to take a job that only paid more or less what the benefits were. So the sooner those benefits expire, the better for the normalization of the economy, because there are shortages of everything out there, and labor added to the mix of lots of industrial commodity shortages and component shortages was really screwing up the supply chains for a lot of companies. So anything that happens to remove one source of pressure brings us closer to normal. So it's a good thing, and I think the unemployment benefits serve their purpose. They got a lot of people through what was, like you said, just a crazy year without starvation, because that's what it would have been when people were locked at home. They weren't allowed to work, and they still had their bills to pay. Where was the money going to come from? So this helped. There was an emergency measure that may have been necessary, I guess, but now it's time for it to end.
It seems like, in your view, this is going to help normalize the economy. This is something that we're hearing a lot. We've been hearing for the last year of when are things going to get back to normal? Your view on that big picture. Are we transitioning more to a normal time period instead of this strange world we've been living in for a year and a half?
Well, yes and no. Actually, three things, not just two things here. First, we're getting back to the current definition of a normal economy. But unfortunately, that's not really normal, historically speaking, because we continue to borrow insane amounts of money year after year after year, and we continue to create huge amounts of new currency and dump it into the system to pay for all that debt that we took on. And that is heading us towards some kind of a gigantic financial crisis. So, there's nothing really normal about today's world. On the other hand, we may have another year or two of non-gigantic turmoil in the system where people go to work and they get paid and they go home and they buy stuff. Again, that may or may not happen. There's no way to know that. But at the same time, the global supply chain, globalization has taken a real hit from the last few years. And it's not clear how we transition into something that works for more people, because clearly moving all our jobs to China and then borrowing a bunch of money to buy the stuff that China made and sold back to us wasn't working. So now we've got this transition away from just across the board globalization and towards something that involves actually making stuff at home. And that, that's kind of a separate thing that was going to happen regardless of the pandemic and regardless of our burgeoning debt crisis. So that's, something else we were going to have to go through. So we've got a lot of issues right now. But I think the biggest thing that we should take away from this conversation is that by getting back to normal, all we did was take us back to the economy of, say, 2018 or so. But with the huge increase in debt that we've got to carry because we borrowed all this money in the last couple of years in order to stave off a pandemic-driven Great Depression. So we're in much, much worse shape than we were 2 years ago, even if we get back to, employment levels that look the same, and even if inflation subsides like the Fed says it's going to, which it very well may not. We're much more deeply indebted, so we're that much closer to the gigantic crisis that's heading our way. So nothing really got fixed in the last year, and nothing will get fixed going forward because we're still making the same big mistakes. The pandemic was just this blip in an otherwise incredibly bad trend that we were on, and the pandemic made it that much worse. So now we're you never want to mix up imminent with inevitable. And the big crisis that was going to flow from all this debt was always inevitable. It was always going to come, but you couldn't say when. You couldn't say next year is the year. But and we might be reaching the point where it's possible to say that because with inflation ticking up, the Fed is in a box where it either has to raise interest rates to combat inflation or let inflation run out of control. But if it raises interest rates, it blows up huge sections of the global economy. And there doesn't seem to be a middle ground there. If the Fed tightens, the stock market crashes and pulls the economy down with it. If the Fed doesn't tighten and just keeps interest rates at zero or thereabouts and keeps pumping out huge amounts of money via QE, then we spin out of control in a different direction. And that's it. We don't have some easy middle ground where we go from here to, in a painless way, to a sustainable economy. We've got a gigantic crisis that we have to get through. And it's really just a choice of which crisis, and neither one of them are going to be pleasant for anybody except a tiny group of people, including, I think, the gold bugs in this case.
Now, you mentioned how there's the debt and how it's going to have consequences in the future if this all collapses. Now, do you want to share with the viewers some of the consequences that the debt actually probably will have in the future?
Well, yeah. When you take on too much debt, whether you're a person or a country, your life gets harder because you've got to pay that debt off. You've got to pay interest on the debt, and then you've got to find the principal somewhere to get, to pay it back, which means that is money that you couldn't spend on more productive things. And, as not just the U.S., not just a country, but the entire developed and a big part of the developing world are all in the same boat where we borrowed so much money that it's becoming debilitating. And you can see that that's true based on the behavior of all the central banks that have had to push interest rates down to crazy low levels and are just running the printing presses flat out to flood the system with currency to keep all the debt we took on in the past from blowing up on us. So there will come a time, and probably we're in that time now, when a crisis comes along that's so big that it requires the central banks and the central governments of the world basically to bail out everybody in sight. And that finally blows up the system. And I think there's a good chance that the pandemic lockdown was that crisis, because now we've got this long list of entities out there that need to be bailed out still. Even if we go back to quote unquote normal in the economy, states and localities still have pension plans that are bankrupting them and that either have to be bailed out, or a lot of cities and quite a few states have to declare some version of bankruptcy and stiff their pensioners and their creditors and pretty much everybody who's associated with them, that alone would cause a gigantic financial crisis. Or the federal government has to bail them out with several trillion new dollars that they've got to create out of thin air. And that's just one group. Then you've got student loans, and you've got, the housing market is probably headed for another discontinuity because prices are so high that nobody can afford houses anymore, and on and on. You look around the country, and everywhere is some group of people who need to be bailed out very desperately right now. So this might be the crisis that causes so much new currency creation to take place that it puts pressure on the currencies of the world. In other words, the dollar and the euro and the yen start to fall, which is another way of saying inflation starts to spike. And then interest rates go up in response to rising inflation. And those rising interest rates blow up the leverage speculating community, which is to say just about everybody these days, and that's the end of the game. So we're in that process right now where inflation is starting to rise, interest rates are starting to rise in response, and the governments and the central banks of the world are trying to figure out how to navigate this and realizing they don't have any tools to do it. So the question is, when do people realize that central banks do not have any way to stop what's coming, and how do they respond? And you know, that'll be the interesting part of the game, I think, because when people start acting accordingly, when they realize that inflation is here to stay and currencies are going to fall in a disorderly way for the foreseeable future, they're going to respond by bailing on those currencies. So you get the Austrian School of Economics crack-up boom, and that's basically the end of the fiat currency / fractional reserve banking world. And, it feels like we're not that far from that all of a sudden. So the fact that we can't do anything about it as individuals means we have to figure out how to protect ourselves and our families from what's coming. Rather than necessarily hope that some new politician comes along to bail us out or some new Fed policy turns out to be the thing that saves us. That's not going to happen. So we have to take our own situations, our own futures in our own hands and start preparing for this thing that's coming.
I think that's such a good point, because I remember when you mentioned how, there are so many obligations that different states have and the government has, and essentially there's too many obligations, right? And they have to be bailed out in some way, maybe through the printing of money. I kind of remember what Alan Greenspan said back in the day, where he's like, the government's never going to default on its debt because we can just print the money, right? And it's like, yeah, that's so true. But in the end of the day, that just devalues the dollar and it devalues people's savings. So it doesn't seem like there's a way out of this situation. And what we need to do, as you mentioned, is protect ourselves, right? To position ourselves so that we're not hurt by the crisis that's coming. So kind of in your perspective, if we look at the maybe this next year or two, some of the key things that are on the horizon. I mean, one you've mentioned is inflation that we're already seeing right now, and it could continue. Kind of the things that people should be looking at right now to protect themselves against.
Yeah, okay. Well, first, one thing about what you said about the government defaulting. Yeah, they can print as much currency as they want to, so they can always pay back their interest on their bonds. But inflation that results from that is a form of default. It's just a slow motion default, and the question is, when do we see it as such? Now, what we should be doing to prepare is really just the basic common sense things that we should have always been doing. We kind of got away from what we would consider to be a righteous life, I think, most of us, because everything was so easy for such a long time. Money was available and there were jobs and the big systems of the world looked like they were going to take care of us. So we didn't feel like we had to do the things that prior generations kind of just took for granted. So among those things are, try to be relatively self-sufficient. Don't just depend on global supply chains to give you everything you need, because that might not be true in the future. So, a garden. Most people in the past, or a lot of people in the past, had gardens, and they grew things that they canned for the winter, and that was considered normal life. Well, it should be normal life again. We should be taking control, at least in part, of our basic necessities. And that's fairly easy to do. I mean, most people can find a little plot of land for a garden, and it's also a pleasant thing to do. It's a nice life to grow some of your own food and take care of yourself in that way. Another thing that we should all be doing is shifting our finances away from financial assets that depend on the value of the local currency. In other words, your bank account depends on the value of the dollar for its value. A bond fund is basically just a stream of dollars coming to you over the next few years. Well, if the dollar goes down in value, that fund goes down in value. So move your money out of things like that. In other words, stop trusting the government and start trusting real things. So you sell your bond funds, you close out your bank account, and you buy maybe physical gold and silver as a replacement for the money in your bank account. Gold and silver are the forms of money that we used to use. They've held their value for 3,000 years, and the government can't make more of them. So they would tend to hold their value in a period of inflation that might culminate in a currency crisis. They'll be okay. And they have been through just about anything humanity could throw at them for centuries. And the final thing you want to do is more fully embed yourself in your community, which again is just, it's the common sense lifestyle of people prior to the last few decades. In our parents' generation, most people had a church that they went to, even if they weren't extremely religious. It was just part of their community. And most people were more embedded in their town via, a job where they went to locally, and they spent time with the people that they worked with, or because they had bigger families that they spent time with, or because they volunteered their time. It's gotten very easy to live an isolated life over the past few decades because everything was available without necessarily being embedded in a community. But I think we need to go back to that now, because when things get really crazy, you want people who will watch your back, and you want to be able to watch your friends and families back. So, rejoin a church if you're not in one. Volunteer your time for good causes and get to know the people who also volunteer. Connect with your friends in ways that maybe you've let slip over time. Do things like that, and you'll be part of a community that is there to support you and each other when things do start to kind of spin out of control. And like I said, this is all just basic common sense. It's the way we should have lived all along, but we got away from it. So it's time to go back to, and people call that prepping, and they refer to it by a lot of different names. But basically, it's just the kind of life that maximizes happiness over the long run, and it also maximizes your safety in a lot of ways. So do all of those things, and your odds of getting through a 5 or 10 year period of really crazy finances, maybe with some geopolitical crises thrown in, your odds go up of doing well during that time compared to somebody who's basically lived an isolated life and has to rely on themselves for something like this when things get really crazy.
I think it's so interesting because a lot of the things you mentioned are just good things to do. It's not like it's just in our weird modern world where it seems like it's being a prepper or it seems extreme and stuff like that. It's just like holding real assets and having a community like that. That was normal back in the day. It's something that regardless of whether there's a crisis or not in the future, it's just some good things to do.
Yeah, I mean, that really was how most people lived. If our grandparents are listening to this, they're going to find it kind of funny that this is new advice, that people actually need to hear this. But, a fiat currency world, a world where money is untethered from anything real, kind of tends to create these kinds of situations where it's just so easy to borrow money and your real estate goes up in value and your stocks go up in value, and it gives you this false sense of control over the world and over your life that you really shouldn't have, because it's all based on a fallacy that you can create unlimited amounts of money and that equates to unlimited amounts of wealth. It doesn't work that way. And we're going to find that out. When the experiment finally fails, which it is, it's in the process of failing now. It may fail shortly. And we have to go back to the restrictions placed on us by sound money, which in the US, for instance, if we went back to the gold standard and were unable to borrow huge amounts of money anytime we wanted to, that would mean we would have to live within our means. And, in the past year, for instance, the government borrowed more money than it took in via taxes. So it basically created out of thin air the money to run more than half of its functions. So we would have to scale back by that amount in order to live in a sound money world. And that would be really wrenching for a lot of people. But that's what's going to happen. So if you're not prepared for that, then you're going to see at best your living standard cut in half. But if you are prepared for it, your living standard won't change all that much at all, right? If your garden is still your garden, regardless of what the dollar is doing, then you're still going to get that food. You'll still get eggs from your chickens if you have backyard chickens. You'll still hang out with the people you know from church and your relatives in town and the people that you work with. All of those relationships will still be there. So your life won't change all that much if say your stocks go down, or if something happens to what's left of your bank account. You'll still be okay. And I think that's the most we can hope for in a really wrenching transition like this, is to be mostly okay. But that's going to seem pretty good by comparison when all of this stuff starts spinning out of control.
And kind of getting to the balance here, because there's a lot of different assets, right? Where like Bitcoin or mining stocks and stuff like that, where it's still kind of in the system, it's more electronic, right? I guess what is the balance in your mind with respect to like holding physical assets, but then also there's the speculation side as well?
Yeah. Well, once you've got a sufficient amount of real assets, in other words, you've got the real estate that you need and want, and you've got some precious metals to see you through a time when maybe your bank account isn't working right or anything, and protect you from a dollar collapse. Then you can go on to things that are, rather than just assets, like gold and silver are money. They're not the same thing as a stock, but you can go into the stock market with stocks that are in the real asset realm. In other words, a gold miner, for instance, owns gold in the ground. So that's just another way of storing gold. So when you buy, 100 shares of Newmont or something, a big gold miner, you're in effect buying a little share of the gold that company owns. So that's a way to invest via the stock market in things that might go way up, instead of just preserving your purchasing power, the shares of, for instance, gold miners or some energy stocks, or possibly cryptos. That's a trickier one, but it's conceptually similar. Those things are, because they're investments, they can make you some multiple of the money you put into them. But they come after you've got the physical side of things nailed down, and you're ready to take some risks, because at the same time a gold mining stock can quadruple your money in a couple of years, it can also go to zero if some non-gold related thing happens to it, because managements screw up all the time. They make big mistakes. They do things that are criminal in some cases in the mining industry. So you're taking extra risks by investing in stocks that don't exist with things like gold and silver held in hand, because those things, like a gold coin, does not have a counterparty risk. Nobody has to keep a promise for that thing to hold its value. But that's not true with stocks, or to an extent with cryptos, because the exchanges still have to work and everything, and there's hacking that can go on that affects the value of cryptos one way or another, and so other things have to happen for those things to go up. Not to say they won't go up, or at least be stable, but those are extra risks. And you need to understand those risks when you go into things like stocks. But yeah, I own a ton of gold mining stocks, just because I think they're a phenomenal investment and or speculation, depending on which kind of stock you're talking about. Because gold and silver are high enough now that most of the big miners who are producing and selling gold and silver are making good money. They're seeing their cash pile up. They're paying off their debt. They're raising their dividends, and yet they're still seeing their cash balances grow. And that's a really interesting investment profile. So I think gold miners are, with a few risks that should be understood, a really good place to be right now if you've got the understanding to invest in the stock market and the stomach to put up with some corrections, which will be inevitable out there over the intermediate term, say 3 to 5 to 7 years. They'll probably make you a lot of money.
Well, John Rubino, we really appreciate your insights today. And I think that's so important to have that balance, right? And one of the things you mentioned about, like having that foundation in hard assets and like if you want to have a garden or something like that, becoming self-sufficient, having that foundation. But then, like the more speculative investments and stuff like that come after that. And I think that's so important. Now, if people would like to learn more about your work, where can they find you?
I run dollarclaps.com, and there's a mailing list button at the top of the homepage where you click on that, put your email address in, and I'll send you whatever I write via email for free. And we never use the email addresses of the people that sign up for anything else. So your privacy is totally protected, and I'll just send you stuff.
Fantastic. And if people would like to hear more of these interviews or any of the other interviews we're doing, they can go to libertyandfinance.com in the left-hand corner, sign up for that free newsletter. Thank you so much for your time, and God bless.
Thanks.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.